Welcome back to Nasdaq Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. Joining me at the market site, we have Joe O'Keefe. He is the CEO of Pax World. We are going to focus on our favorite subject, ESG investing, and how investors are starting to take an activist approach. Thank you so much for joining us at the market site today. ESG assets reached $14 trillion in 2018, according to US SIF. That's an impressive number.
It's a big number. This is a long-term secular trend. It's not a fad. Issues like climate change, issues like gender equality aren't going away next year or the year after, and investors, I think, want to increasingly be part of the solution rather than part of the problem when it comes to these issues, and they're finding ways to do it with their investment dollars.
And so they're taking more of an activist approach is what you're seeing.
Absolutely, and a lot of the ESG funds like ours, we not only integrate environmental and social and governance ESG factors into our portfolio, but we're very engaged investors. We enter into dialogues with companies, we file shareholder resolutions, we really press the companies in our portfolios to do even better because we think companies can have more gender diverse leadership teams, companies can have lower carbon footprints, and we want them to move in that direction. We think that's good for business and good for investors.
I mean, I would imagine too that the more focused you are on ESG, the better your performance is going to be as well as a company.
We strongly believe that. I think the data is pretty compelling on that right now, Jill, on ESG broadly and on some specific issues like gender equality. I think the data on gender diversity is overwhelming at this point. Companies that have more women on their boards, companies that have more women in management simply perform better. We have a fund, Pax Elevate Fund, that we launched with Sally Krawcheck. We feel that fund's proving that out every day in its investment performance.
That's why we're proud our CEO is a woman here, so we are all on board with that. Now, let's learn more about Pax. You launched the first socially responsible mutual fund in America in 1971, coincidentally the same year that Nasdaq was founded. Lots of good things happened in 1971.
Yep. We did, and back in those days, it was started by two United Methodist ministers who wanted to start a fund that did not invest in weapons because they did not support the Vietnam War. And in those days, the space was more about excluding certain types of companies from portfolios. Now it's more about including. It's about what you invest in, not what you don't invest in, and what really ESG or sustainable investors want to invest in are companies that get it when it comes to this transition to a more sustainable global economy, and they want to invest in companies that get the opportunities and get the risk and take advantage of those.
Every time I have an ESG guest on, I find one of the most interesting things to discuss is there a standard in terms of what's included in an ESG portfolio, and do you think the industry is going to move one way or the other?
I don't think there'll be one generally accepted standard any more than there's one standard for what constitutes a value stock. You could have Warren Buffett and Graham and Dodd sit down, look at the same stock, and one could see it as a value stock and another say not so much. Two ESG analysts, one from MSCI, one from Sustainalytics, could look at the same company, reach different conclusions. What we need, though, is more readily available data. Over time, the marketplace will work this out. We don't need one standard. What we need is better data, better reporting, and then let investors, let analysts, let portfolio managers make their decisions, and over time, the market will sort out the leaders from the laggards, like any other market does.
And your outlook, you said that this is definitely not a short-term trend, it's a longer-term trend.
It is a longer-term trend, and in the near term, I do think in volatile markets, ESG funds tend to hold up well. They tend to be lower risk. They tend to focus more on higher quality companies. They held up well over the fourth quarter of 2018, and we expect that to continue.
All right, Joe, thank you so much for joining us at MarketSite. And thank you for joining me. I'm Jill Malandrino, global markets reporter at Nasdaq.